How often do you find yourself pondering the unpredictable dance of the stock market? It's a fascinating spectacle, isn't it? Especially when we zoom into the performance of specific stocks. Take Kraft Heinz, for instance. This consumer staples giant is currently on a roller coaster ride, grappling with the challenges of inflation while strategizing for recovery. Kraft Heinz is a classic example of a company that's teetering between two worlds. On one hand, it's wrestling with the elevated inflation that's impacting many businesses around the globe. On the other, it's showing signs of resilience, with strong pricing power and a consistent track record of long-term outperformance. Despite the hurdles, the company's recent earnings report paints an intriguing picture. There's growth in organic net sales, adjusted EBITDA, and adjusted EPS, suggesting that Kraft Heinz is not just surviving, but potentially thriving amidst the turmoil. The company is also making strategic moves to gain market share, improve supply chain efficiency, and reduce volumes sold on promotion. All of these initiatives hint at a company that's not just weathering the storm, but also preparing for a sunny tomorrow. As we delve deeper, one might wonder, is Kraft Heinz a good recovery play? Let us take a closer look at Kraft Heinz, a company that has been on the financial radar lately. This food and beverage titan, known for its iconic ketchup and cheese brands, is currently navigating the choppy waters of the consumer staples sector. But despite the challenges, Kraft Heinz is emerging as a potential recovery stock, one that might just have a few aces up its sleeve. Firstly, let's talk about supply chain efficiency. In a world where the global supply chain is more like a game of dominoes, Kraft Heinz is striving to improve its efficiency. By streamlining processes and reducing the volume sold on promotion, the company is aiming to enhance its profitability and resilience against inflationary pressures. Speaking of inflation, Kraft Heinz is expecting mid-single-digit inflation for the full year. Now, that might sound like a cause for concern, but it's worth noting that the company isn't simply sitting back and watching the inflationary tide rise. Rather, they are actively seeking ways to mitigate its impact and maintain their competitive edge. But what about the company's financial health? Well, it seems to be on the mend. Kraft Heinz's balance sheet health has improved considerably, which is always a positive sign for potential investors. And let's not forget the dividend payout ratio, which currently stands at an impressive 53%. This suggests that Kraft Heinz is not only generating enough profit to sustain its operations, but it is also rewarding its shareholders with regular dividends. Now, the big question, is Kraft Heinz undervalued? Well, with its initiatives to improve supply chain efficiency, its proactive stance against inflation, and its improved financial health, it's certainly possible. After all, the company's outlook for organic net sales, adjusted EBITDA, adjusted gross profit margin, and adjusted EPS have all been raised, indicating a positive trajectory. With these factors in mind, could Kraft Heinz be undervalued? It's a tantalizing question, and one that investors, analysts, and financial enthusiasts will be closely watching in the coming months. Numbers often tell a tale that words cannot express. So let's take a moment to dive into the figures behind the scenes. Kraft Heinz's recent performance is quite promising, despite the challenges they've encountered. The company has upgraded its outlook for organic net sales, adjusted EBITDA, adjusted gross profit margin, and adjusted EPS. This is a testament to their resilience and their ability to adapt and thrive, even in the midst of market fluctuations. Now let's consider the potential returns. Kraft Heinz may just be the dark horse that investors have been waiting for. With the possibility of a 15% annualized return, it's certainly a prospect worth mulling over. It's not often that we come across a company that is both undervalued and poised for growth, but Kraft Heinz seems to tick both these boxes. The market, as we know, is a complex web of interconnected entities, so it's crucial to not lose sight of the broader picture. Let's take a quick look at some other players who've had noteworthy performances recently. NVIDIA, a titan in the tech industry, has been enjoying a strong earnings streak. This has given a significant boost to Nasdaq futures, propelling the tech sector to new heights. On the other hand, we have Cisco Systems, which took a hit after forecasting a lower than expected revenue. Yet, it's important to remember that in the world of stocks, a temporary dip doesn't necessarily spell doom. And then there's Boeing making strides with Virgin Australia's plans to expand its fleet, and an upgrade from JP Morgan. So, what does this all mean for the average investor? In the world of stocks, every day brings a new set of challenges and opportunities. Today, we've delved deep into the stock market's recent shakeup, unraveled the potential of Kraft Heinz as a recovery stock, and closely examined the numbers. Kraft Heinz, despite facing its fair share of challenges, has shown promising growth in organic net sales, adjusted EBITDA, and adjusted EPS. It's been working tirelessly to improve supply chain efficiency and reduce volumes sold on promotion. With its balance sheet health improving and a dividend payout ratio at 53%, the company is on the road to recovery. We've also looked at other stocks making headlines like Nvidia's strong earnings boosting Nasdaq futures, Cisco Systems forecasting lower than expected revenue, and Boeing's stock rise following Virgin Australia's plans to expand its fleet. As we wrap up, remember, these trends are indicators, not predictions. It's crucial to keep a keen eye on the market, do your research, and make informed investment decisions. The stock market isn't a gamble when you're armed with the right information. So stay informed, stay invested. Remember, the stock market is not a gamble if you arm yourself with the right information. Stay informed, stay invested.